All right, we're hoping to talk to Wale Olusi, who's an investment analyst at AfriInvest, to talk more about this oil and gas stocks. As I said, 7 of them. We're talking about their performance this quarter, in the third quarter. This is last week in August. And of course, we're likely to see more profit taking of most of this oil and gas stocks. But they reported quite fantastic. Some of them reported quite fantastic Q2 earnings. So how do we think that most of this, or do we think that the pricing justifies the earnings? We're hoping that Wale will help us to answer that. But we're turning our attention in the meantime to domestic commodities. And joining me now with the market update is Bolanle Olutosin, a research analyst with Financial Derivatives Company Limited. Good morning, Bolanle. Thank you so much for coming on the program.
Good morning. Thank you for having me.
So, Bolanle, it's been a topsy-turvy time for domestic commodities. And taking a look at the report sent in by FDC, we see that consumer spending is still not letting up. Talk to us about what is driving the market.
Well, we've added like a new slide to the commodities presentation, which is the burning issues, which are key issues, current being the key word that drive the commodities market. We believe these issues would affect consumer behavior, investors and manufacturers within the commodity market. So number one, the first issue we discuss about is the suspension of the 9 banks from the FX market. Well, 8 banks now that UBA has paid its dues. So what happened last week was that once these banks were suspended from the market, we saw a shrink in the supply of dollar within the economy. Well, it created supply bottlenecks within the economy, and we saw the naira depreciate to about 400, below 400 in the parallel market and below 300 in the interbank market. So what happens is, we believe that the suspension may be lifted, and if that happens, we should see these bottlenecks ease out within the economy. So the second issue is the forex reserves, or the foreign reserves, which has increased by about 2.3% to 26 billion naira, $26 billion. What this does is it adds to the supply of dollars within the economy. The third issue is the FAC allocation, which came out for July, has reduced to about 443 billion naira, way below, about 21% below the 560 billion naira we saw in June. This is way below the 700 billion we predicted was going to get up to. What this does is that it reduces salaries and wages paid to civil servants, and in turn reduces the demand for commodities within the economy.
But then it doesn't reduce the amount of, the amount you're going to spend at the market, because the prices of goods still remain relatively high.
Well, if you have less to spend, you wouldn't purchase what you used to. Your basket of goods would change. So that's exactly what we see in the market. So the final burning issue that we've looked at is the delayed inflation figures. Although these figures don't have an impact on commodity prices today, because these are inflation figures for July, August figures are meant to be coming out as soon as the July figures are released as well. But then what this does, it affects the decision of the MPC meeting, the upcoming MPC meeting in September. So the central bank decides whether to increase interest rates or to lower interest rates, depending on what they feel is important for the economy as at now, whether to curb increase GDP or reduce inflation. And if increasing interest rates is the direction they follow, manufacturers need to borrow money to produce more goods within the economy. Prices of consumer goods would increase, and thereby declining the demand for such consumer goods. Although what we see in the market is that manufacturers are waiting for a time when this naira and dollar equilibrium occurs before changing prices. As we've seen, commodity and consumer prices remain stable within the market.
Well, according to FBN Quest Good Morning Note, I don't think you had a chance to read that before coming on the program, but they talked about domestic rice production being a necessity. Now, taking a look at, of course, the list that you sent in, the report with regards where the market is, we still see the price of rice fluctuating around 19,000 naira, at least here in Lagos, and 18,700 naira. On a more, that's for Kano. But what do you think, talking about the commodities now, any commodity in particular that you think is being affected by all of these issues that you've just mentioned?
Well, none of the commodities are affected now.
Not even rice?
Not even rice at the moment. But it could also mean that there's a time lag between when issues occur with the supply of some of these products and when manufacturers decide to change prices, as we've seen consumer resistance build up within the economy. So for rice, it's an inelastic good. So before a manufacturer decides to change price, it's actually relatively inelastic, because Nigeria, as we see, we can always substitute rice for the likes of gari and some other commodities within the market, or corn within the market. But what happens is, if it's a situation where demand for rice is still increasing, as we see, what happens is producers would decide to increase the prices of rice.
Okay, so talk to us. Yeah, I know that there was also in your report, you indicated the impact on the commodity prices. I'm guessing you're talking about the banking issues and, of course, the forex issues as well. So talk to us a little bit about that.
So with the forex issue, we need dollars to import some of these goods. The majority of our commodities are being imported into the country. So if there's a case where we have scarcity of the commodities within the market, we see prices go up. So in the near term, if these issues are not dealt with accordingly, we should see prices go up in the near term.
So that's your outlook for the week? That's
our outlook for the week.
You're expecting to see more spending or less spending? Because, yeah, the goods are there. You know, you have the products there, the commodities are there, but you don't have the money. You don't have the cash to buy it.
Yes.
So
we do expect prices to ease out depending on how demand fluctuates.
Well, Ali, I'm going to have you back here on Thursday, and we're going to take a look again at the commodities market and see if they actually follow in line with what you've predicted. Well, thank you so much for coming on the program this morning, Bolanle.
Thank you for having me.
Well, I'm being joined now, that was Bolanle Olutosin. She is a research analyst with FDC Limited, of course, taking us through what's actually shaping domestic commodities, giving us an update on that. But let's also talk about oil and gas stocks. As I mentioned earlier, Wale Olusi is an investment analyst with AfriInvest. He's joining me now as we take a quick look at some of the stocks. Good morning to you, Wale. Thank you so much for coming through.
Morning, Harris. Pleasure to be here.
2 months already into the third quarter. How would you rate these oil and gas stocks?
Well, I think what we've seen in the last few weeks is broadly driven by how investors felt these oil and gas stocks, particularly downstream ones, how they performed based on their Q2 results. Many of them rallied after they posted some impressive numbers in Q2, particularly FO, Total, Mobil. I think MRS also moved from a loss position in a previous period to a positive position. For Seplat and a few other upstream stocks, many of them actually did very well. So we saw some uptick in their performance for about 2 or 3 weeks around that time. But in recent time, because of what we have so far in the market, investors are taking profit. So except for last week, I think Seplat also rallied last week. Maybe due to the recent rally in oil prices, following speculations of some OPEC members rallying together to see whether they can do something about the current price environment we have in the market. So there's not been much happening apart from that. In Q3, maybe we can have a follow-up on what they did in Q2. So if the numbers are good, then we expect that investors will rally again. But for the upstream tickers, particularly like of Seplat and Oando have done some restructuring on their loan issues with a few banks. We've been able to restructure some of these loans to so that they can meet obligations. So apart from that, if the production distortions in Nigeria are better handled by them, and maybe investors start taking another look at the likes of Seplat and Oando. So, say for this, we expect the downstream guys to continue to churn out good numbers following the reform in the sector of NNPC's new price regulation environment. So, broadly, the outlook is not very bad for the downstream ones, particularly, but for the upstream guys, we will still continue to look at what is happening in the Niger Delta region to see how investors will react to their performance.
But while they're taking a look at the market and taking a look at the stocks and how they performed, we know that some of them actually posted fantastic Q2 earnings. But for the last couple of days, we've seen rallies that seem as if it's a cat bounce, if you like. But do you think, looking at the prices of this particular equities as they are at the moment, do you think their pricing has justified those earnings?
Well, at the moment, the investor sentiment is broadly weak, so we don't have a lot of investors who are taking a strong position in the market. What many of the investors are doing are basically looking at recent prices and seeing if they've reached their, say, 2 to 3 months low, and taking a speculative position in some of these stocks. When they feel they've met their target, they sell off. So what is happening is speculation. Most of the investors we have, they are not really taking a long-term position. The overall fundamental of the economy is still weak, so is investor sentiment. So what is broadly driving performance is partly due to what is happening in the economy and the quarter-on-quarter performance of some of these stocks.
All right, Wale. So, thank you so much. Thank you so much for joining me on the program. Of course, I will have more chance to talk about the oil and gas stocks in a bit, but thank you so much for your time. We're going to be taking a quick break now on the program, and we'll be right back.